Brazil seems to have attracted a lot of attention because of the motivations behind the tariff, the size of the tariff, the unexpected nature of the scale of the tariff on Brazil. How much from a market's perspective does this matter, do we think? Clearly, it's having an impact on some European companies that have exposure.
Yeah, it certainly raised a lot of eyebrows in Latin America when the news broke at the end of the US Day yesterday, Anna. Local markets really came under the cosh. You know, we saw the real down about 3% and local ETFs similar amounts. And, you know, the fact of the matter is that Latin American currencies have been performing extremely strongly this year, so it's a little bit of a take back from that, and it's still performing well. But all things being considered, you know, it's a nasty jolt, as you said. Now, we were wondering at the start of the Asia Day, how much of a contagion risk is there into the rest of the emerging market complex, in particular other BRICS nations? Didn't really see it. Quite surprisingly, markets seem to shrug it off and see it as a sort of individualized case. And once again, this idea that, you know, it's the sort of escalate to de-escalate kind of thing from Donald Trump and trying to make his point. Nonetheless, as John Authers argues in his column today, which is a really good read, this is politics and economics getting a bit muddied and melded together, and that's quite a confusing signal for everybody to take away. The other thing, I think, watch out for coffee when it trades later today, and, you know, what that means for chains in the US and for inflation outlook and for people's day-to-day expenses as well. So Brazil is such a big supplier of coffee to the US.
Paul, you mentioned confusing signals there. I think that brings us on to this Chinese story that property shares surged on unverified reports of a high-level meeting. What's going on in Chinese markets? Because it's had an impact on iron ore, on basic resources. Iron ore is up some 3.4% on the speculation.
Yeah, and Chinese property stocks up 10%, sort of, judging by one gauge at least. Not entirely sure, but it seems like there's a possibility that there'll be more briefings, more supportive measures coming through for the policy sector. China in general seems to be getting there with some extra sort of fiscal measures, talking about involution and the need to stop that kind of like cutthroat price competition as well to try and sort the market out. So more positive signs there. That's helping push the onshore gauges to the highest levels of this year. People starting to feel a little bit more optimistic in general about the Chinese economy.
All right, Bloomberg's Paul Dobson. We'll talk just a little bit about China, a little time about tariffs. In our last 30 seconds here, Paul, I want to very quickly ask you about the dollar in all of this. The dollar has weakened against G10 currencies, but strengthened against EM. Why is it not weaker?
Yeah, why is it not weaker? Well, I mean, it's had a pretty punishing ride already this year. But I think that what's really interesting is this Goldman Knight sort of talking about the idea that it could trade more as a risk currency and less as a haven currency is interesting. You know, obviously under a lot of pressure already from the perceptions of what the Trump administration is doing to its image and the possibility of Fed cuts. So it could continue to weaken. We're just seeing that little bit of stability right now.